taking the time, Cory.
Thanks, James. Pleasure to be here.
I just want to start off, I guess, by looking at Latrobe. I mean, there's a lot of non-banks in this space. They all sort of offer different niches to a degree. What would you say is Latrobe Financial's key point of difference in this market?
Yeah, our key point of difference would definitely be the broadness of our product suite, which has been modelled around a customer's life cycle. So our thinking in this is that brokers' businesses have evolved over time. We've seen them go from monoline offerings where brokers had a residential mortgage practice or a commercial mortgage practice or maybe even an asset finance mortgage practice. And the natural evolution of that, and continues to evolve, is that these are now combining into a more holistic practice where they're offering residential and commercial. So it's very much an and story. And we've made sure that our product suite has moved in line with that as well. So we know it's about simplification for brokers. Through their aggregation groups, they'll have access to a panel of up to 40 lenders, but typically they'll only use 5 or 6 lenders. They just can't be across all of the products and policies in the market. And typically that's 2 or 3 major banks, 2 or 3 non-banks or second-tier lenders and a specialist lender. So our thinking is really to simplify that for brokers, is to have a product suite in the specialist space which says, when I look for a specialist lending solution, I'll go to the specialist lender that can satisfy a number of our customers and their product needs and get familiar with that process. Taking that a step further was the product design, which what we really took was our residential product, our forms, policies and processes, and applied those across our full product suite. So it's whether it be a commercial, development finance, self-managed super fund and the like, it uses the same forms, processes as a residential mortgage. So for brokers that write residential, with us they can now write commercial and these other product offerings without requiring the additional training and requirements, because we know from time to time we'll be in our broker's focus point, but it may not be all the time. So that's by far our key differentiator.
In terms of your product suite, what would you say is the most popular product at the moment, or the one that's gaining the most traction at the moment?
We've seen it really shift, and it depends on what's happening in the marketplace. And if I think about a customer's life cycle as a reference point, and start at the front end being a first home buyer product, our parent-to-child product's been incredibly popular on the back of a lot of the media around housing affordability issues in this country, which, you know, for this industry, it's probably the most talked about topic, and certainly had eyes on it. So our product, which helps support first home buyers and address the housing affordability issue, has certainly seen a ramp up of late. We've also seen an increase in demand from upgraders and investors typically, again with much publicised movements from APRA around the major banks in investment lending space. We have seen an increase in appetite for that product. Upgraders who are looking to hold on to or get into the market, particularly in Melbourne and Sydney, where we've seen prices escalate over the last 18 months to sort of unforeseen levels, has led to a demand in that space. Pushing further into the wealth creators, self-managed super fund product on the back of the government's policy changes around superannuation, which was announced in May 16 before reaching royal assent. That meant that there was eyes on that product for us as well as development finance and the like, people who are really looking to create wealth in their retirement. And more recently, even through our aged care product, where the refundable accommodation deposit bonds, the ability to have to fund those and the escalating prices of those, particularly again in Melbourne and Sydney, has meant that product has had significant eyes on it. So we're seeing that across the board. It depends on what happens in the market, whether it's movements from regulators, whether it be from major banks, but also generally in the non-bank space. We're seeing now that consumers are more likely to turn their attention to a non-bank or a challenger brand solution. Now that started with Gen X, Gen Z, who are more interested in not doing what mum and dad did and choosing something different. But we're now starting to see that flow right through, where consumers generally just want to know what else is out there and are more attuned to trying something different.
In terms of, I guess, you know, what's been out in the media and, you know, in the spotlight, obviously you talked about the affordability issue. That's one thing, and you also touched on APRA's crackdown on investor lending or the macroprudential measures that have come in. Obviously, that's had to have an effect on the banks in terms of them, you know, capping how fast they can grow their investor books. But I was wondering if it's been a benefit to the non-bank players in some way. What's been your experience with that?
Certainly a benefit, but probably not in the way that you may think. So yes, we have seen a rise in investor loans purely as a result. But it's been complemented by an increase in the number of owner-occupied and other mortgages we're seeing as well. So what it's actually done is it's encouraged consumers again to look outside the banks for different solutions in the marketplace, and being reported so widely in mainstream media as well on this issue has certainly helped, I think, everybody in the non-bank space. So pleasingly for us, it's been an increase across the board, whether it be investment or owner-occupied products.
Good stuff. Cory Bannister, thanks very much.
Thank you.